with the big beautiful bill passing and 100% bonus depreciation coming back, do you know what that means for you and your real estate portfolio? Because most people don't. And that's what we're diving into today. The kicker is that most accountants don't know how to use bonus depreciation effectively, or they don't take the time to explain it to you, and that costs you hundreds of thousands of dollars in avoidable taxes over your lifetime. And if you're a high income earner or a business owner or someone who's just finally stepping into real estate to build a legacy and create wealth, well, this episode's for you. Welcome back to the Wealth Planning Podcast. I'm Anthony Brister, founder of the Brister Law firm, tax attorney, and asset protection strategist. And it's my mission to help you take control of your financial future, protect what you build, and pass on what you build to your heirs so that it can keep compounding for your family. And today we're talking about the real estate tax strategy that turns heads. It's a hot topic and it's literally changing lives, and that's bonus depreciation. Now, I'm not just throwing around buzzwords. I want to tell you a story about one of my clients, and let's call her Michelle. Michelle is a surgeon and she works 60 hours a week between her shifts, student loans. She was exhausted, overworked, and despite pulling in multiple six figures, a chunk of her paycheck vanished every year to taxes. So this year, she decided that she was going to buy a vacation rental in Scottsdale as an investment. A beautiful property, solid income, but she had no idea what it could do besides just cash flow. So she came to me after watching one of my videos, What Your Accountant Won't Tell You About Rental Property Taxes. And she said, Anthony, I had no one explain this to me before. Can you help me out? So here's what we did. First off, we made sure that she understood the short-term rental loophole and the requirements for that. And if you need to know what that is, go check out my earlier video with Kenny Bedwell on short-term rentals, or I got another video on the requirements for the short-term rental loophole. So once she understood that, we then decided she went out and ran a cost segregation study on that rental. That's where we break out the components of the property. So think the appliances, the flooring, roofing, furniture, the foundations, all into their lifespans. And then those shorter lifespans, actually 20-year property and less, can be depreciated faster instead of over 39 years. So then we use that, or we will use that 100% bonus, which just passed thanks to the big beautiful bill this year in 2025. That means that she's going to get to write off 100% of all those short life assets in the first year. So what does that mean for Michelle? Well, she's going to save over $137,000 in federal taxes, and that's not a typo. This is the stuff that your CPA might not be trained to look for, not because they don't care, but because they've been taught to look backwards and we look forward. And if you've been told you make too much to write off your rental, you have to be a real estate professional to get the benefits of real estate, or there's really nothing you can do this year. You've been given half the story, and the truth is that short-term rentals are one of those few exceptions to the passive activity loss rules, meaning that you can use those losses to offset your W-2 or business income if you qualify and you materially participate. And this is where most people mess it up. They don't track their hours, they don't group the activities correctly, they don't keep documentation, and boom, the IRS will say no, or your CPA will say no, and that strategy just falls apart. So if you want to learn more about the passive activity loss rules, check out my video what your accountant won't tell you about rental property taxes below. And if you want to avoid that and you want someone to actually help you walk through the numbers and build this out properly, well, schedule a discovery call with my team at bristertaxlaw.com, and we'll help you maximize that depreciation strategically, stay compliant, and save money that you can put right back into scaling your portfolio. So go visit bristertaxlaw.com to get started. Let me give you another quick example. So I had a client here in Texas buy a short-term rental for around $875,000. Then after furnishings, all of that, we ran the numbers, allocated the land value, and carved out around $200,000 in depreciable assets eligible for 100% bonus this year. And this is going to turn a $30,000 refund into $95,000. Think about what you could do with an extra $65K each year or this year, right? You can turn back around and invest that strategically, and that's how you build real wealth. And here's what I know. People like you, you're trying to do it right. You're building something real. And you're not just trying to save money on taxes. You're trying to buy back your time, create freedom, and build a legacy for your kids. And don't have to, so they don't have to work as hard as you did or untangle the mess when you're gone. Bonus depreciation and cost seg studies aren't just tactics. They're tools to help you take control over that money. And if that's what you're after, then you're in the right place. Don't leave this on your to-do list. If you own or plan to buy property, especially for a short-term rental this year, schedule a call at bristertaxlaw.com, and we'll make sure that you don't leave that money on the table by failing to meet one of the requirements or failing to understand how the cost segregation studies should work in your favor. And if you found this helpful, please share, like, or comment what you learned, and I'll catch you at the next episode.